Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Greg Harmon on the line. He's the founder of Dragonfly Capital Management. Greg, how you doing on this Thursday morning ahead of Friday's job report and a 3-day weekend?
Yeah, I'm doing great, Joel. Thanks for having me.
All right. First, before we go into your current trades and your current setups, you're a veteran of the markets, and boy, oh boy, did you have some fun last Monday, or were your systems locking up on you? Take us back to that day a week ago on Monday, and how you reacted to it.
Well, certainly a week ago Monday, you woke up, and if you didn't get up early, you didn't have much of a chance to do a whole lot before the bottom fell out. We were lucky enough here to see a couple of stocks that had gapped down and got stuck there through the circuit breakers and picked up some good bargains on a couple of names. CVS we ended up picking up at 82, and Blackstone at 32.50. So I wish I had done more bottom shopping then. But
Did you look at some charts, or did you have some GTC orders out there? Did you just go by the seat of your pants? How did you do it?
Well, some of it was by the seat of my pants. I happen to have a position in CVS for some clients, and had been looking at CVS and Walgreens as possibilities to add across the board. So when I saw that it had moved down $25, I just said to myself, this is ridiculous. There's no way that the stock dropped 25% overnight. So I just tossed in some bids there, hoping that I would get hit when it came out of the circuit breaker.
Wow, and you did. Dennis and I were talking about this, and it was definitely a breakdown in market liquidity here. There was, when some of these stocks, like when Baidu bottomed at 100, the actual spread was 100 to 115. Could you just share some of those prices that you got in CVS, just so people know that, hey, when opportunity is out there like that, you have to strike quickly. Do you remember any of the prices that you got?
Yeah, on CVS, we got in at 82.
Wow.
The stock, you saw, bottomed out and hit the circuit breaker, stuck at 80. And I thought at that point, I'll just toss something in there above 80 and below 85 and see what happens. And I tossed in the 85 bid, and as it opened, I got hit at 82.
Wow. There you go. Little price improvement there. You were probably a little bit surprised when that fill came back. Wow, that was a great one. You bottom ticked that. 81.37 was the low. So you were just focusing on the right stock at the right time. Well, that's all history now.
And
I'm sorry, go ahead.
Some of it is luck like that, right? Some of it is luck like that.
Yeah, it is. I know, when I used to trade multiple stocks in situations like that, I just used to throw out like the most marketable limits I could. I mean, and if those kind of situations, it's a stock 96, 98, and you want to own it, man, you're throwing a 98 and a quarter bid or 98 even, and, funny things happen with the computers. You could get some good fills. But now, on the other hand, if you're trying to sell into that, or you had a sell stop in, it probably wouldn't have been as good result. Well, let's look at the market now. That's all history. We've moved up here. Some wild trading sessions, big ranges, resistance. Boy, we just hit Tuesday's high, but that was albeit so briefly when we went to 68.75. We got a jobs number tomorrow, a 3-day weekend. How you playing things?
Well, I wrote something this morning about stepping back and taking a look at the longer-term view in the S&P. And last Friday, I talked about the hammer that had formed on the weekly chart, and the hammer being a possible reversal signal. But for most of the crowd listening here and most of the people focusing day-to-day on the market, it's hard to be that patient to wait another full week to see if something's going to confirm higher or not. Tomorrow, we'll find out whether or not that hammer confirms higher. But this morning, I took a look at the S&P on the weekly status from an Andrews pitchfork perspective. That's a tool that I use sometimes just to get a good handle on the trend and see whether the trend is broken or not.
little Skype problems here, but we are talking. We are on the line with Greg Harmon. He's the founder of Dragonfly Capital Management. Joins us every month or so to talk about the markets. And I believe before we get off, we were talking about positioning yourself ahead of the unemployment data. Probably playing a basically long portfolio, I'm sure. Putting on any hedges, raising a little bit more cash. How are you approaching Friday?
Yeah, so, I mean, for today, there's very little that I'm going to be doing, but that's because I did put on some hedges on the pop that happened towards the end of last week. So with the move lower, I was talking about how the S&P bounced off of the lower median line at the end of this pitchfork, keeping the long-term trend intact. I tend to hedge trades on a position-by-position basis instead of portfolio basis. And with the top last Thursday, put on collars around most of our positions. And the collars that we tend to use are put spreads for protection on the downside and then selling covered calls on the upside. So just about every position has a collar on it now, and we're in some of the collars and some of the protection from the pullback that happened earlier this week.
What would it take in the market, basis the S&P futures here, for you to say, okay, that 1831, that's going to be the low. It's going to be the low for a long time. We're back, just a 1 day, 1 minute, 15-minute correction in the market. What are you looking for? What would convince you that the low's in and better times are ahead?
Well, it's hard to pick just one number. Certainly a move over 2,000. Over 2,000 in the futures would help. Over 2,000 in the index would help. But there are a lot of signs out there that say that this is a correction and not something that's going to be prolonged. The accumulation distribution statistic has continued to level out and be in a rising trend all throughout this pullback. That could all these things could change, but you've got a lot of indications that momentum indicators, et cetera, on longer-term bases are bottoming out and hitting areas where we've had long-term bottoms put in the past. So moves back up off of that, and certainly over 2,000 would help on the S&P. Some support around other areas as well. Treasuries continuing to level back, and watching the VIX drop under 20 would be a huge plus.
What side are you? What side are you on with the Fed? You think that rate hike is imminent here after we get some decent data? December, never, QE before interest rates going up. Where do you stand on that?
Well, I'm not as far down the path as Ray Dalio saying that QE will come before a rate hike, but I don't think that we're going to get one this year. I've continued to look at the dual mandate that the Fed has on both inflation and growth, and saying that your growth is there and growth is solid, but it's not creating inflation, so there's not a necessary condition for the Fed to tighten. Okay. Sure, they could go and tighten if they wanted to, but the arguments that are being portrayed in the financial media seem to be focusing on the fact that there's some goal that the Fed has, that there's a goal to raise rates, that they need to raise rates. It's not really a need to raise rates in the positioning that this will help long-term older people with better interest rates for their fixed income assets. Those types of arguments are just well beyond the Fed mandate. These are policy arguments as opposed to operating arguments, which the Fed is working under.
Okay.
So I don't see it happening.
Okay. I'm kind of in that camp too. Any issues, that kind of still on your buy radar here? Maybe they didn't get the kind of pop off the lows, which is probably not a good thing. If you tried to buy something in that chaos last Monday and it hasn't popped, maybe there's a chance it's not going to. But is there anything that you're still looking at on the buy radar?
There was one yesterday, and it looked like it would really pop today. That was Linde Brand. It's up 2.5% now at the open. So,
okay. All right.
That's starting to get into territory where maybe missed it. Best Buy was another one of those names. That did break out, but it's consolidating. If that gets over, where's that? If that gets over 36.85, it could break out again and continue higher. But it's definitely broken a channel moving to the downside.
Yeah, you had
So that's one item.
Yep. And any short candidates out there?
I'm not focusing on the short side at this point, so I haven't been looking for short candidates. If I had to pick something to short, it'd probably be something like gold, which I think has just been maybe elevated a little bit through fear over the last couple of weeks.
What stock was
that?
that?
As a long-term short.
Which one?
Gold.
Oh, gold. Okay, I thought you said Toll Brothers. Okay, all right. Just any final words of advice here? Like I said, going in the unemployment number, 3-day weekend. Any final words of advice for our investors and traders?
A couple things to keep in mind. This week is a little different ahead of Labor Day than it's been in the past, with most of the kids going back to school. So there's probably not as much of the trading community in New York that's still off this week. So maybe I get a little more buy-in tomorrow. But still, it's a long weekend. The world will be looking to head out to the Hamptons or wherever they go. Buy-ins are likely to be thin. So take what happens tomorrow with a grain of salt. Don't base your entire trading plan on one day's activity ever.
That's great. Great advice. Great advice from Greg Harmon. He's the founder of Dragonfly Capital Management. He joins us here on Benzinga's pre-market prep every month or so, giving us his take on the market. Greg, glad to see you survived last Monday, and we'll make sure we have you on again soon.
Thanks, Joel. It's been fun.